everyone, and thank you for joining me today. I am Martha Peyton. I'm head of applied research, specializing in real estate for Aegon Asset Management in the US. I'd like to tell you a little bit about a piece of research that we will be releasing very soon that focuses on apartment markets in light of the extremely low home mortgage rates that we have seen recently, and in light of the really strong home sales that those mortgage rates have helped to propel. We are investors in middle income market rate apartments, primarily value add apartments that appeal to workforce families. And as such, the question that we're asking is whether there's been any diversion of the demand for apartments based on macroeconomic factors, the low mortgage rates, very strong home sales. So we're looking at data that has been updated to the third quarter of 2021. We're looking at apartment markets by quality cohorts. And we're also looking at the demand drivers for apartments. And let me give you just a couple of numbers here. At the end of 2017, the average home mortgage rate was 3.74%. As of January 2021, little over a year later, it had sunk to 2.65%. Now, I scanned history back to the early 1970s, and this is the lowest home mortgage rate in that history. It's an astonishingly low rate. Well, we didn't see a whole lot of impact on home sales until the beginning of this year of 2021. And we then saw by the second quarter, the beginning of a spike in home sales to also a historically very, very strong number, over 6 million units in existing home sales at an annualized rate. So as mortgage rates declined, as home sales kicked up, we then look at the demographic drivers of home sales, and we focus on the huge millennial cohort. Millennials are those who were born between 1981, 1996. The oldest millennials are 40 years old this year. Shocking, isn't it? And the youngest millennials are now 25. Home ownership among millennials has lagged prior generations at the same point in their lives. Now we see also that as younger millennials mature, they are also putting some upward lift onto the household creation rate. And that's also a very important driver of the demand for home ownership, as well as the demand for apartments. Now, one of the complications of apartment occupancy, of home ownership, is the characteristics of COVID and the COVID recession. Putting all these forces together, the decline in home mortgage rates, the uplift in home purchases, the maturing of millennials, the fact that many of them have families, appetite to nest, prospects for working from home. Putting all those things together, we look at apartment data by quality cohort. And what we focused on were changes between the end of 2019 and the most current period, the end of the third quarter of 2021. What we see when we look at national numbers by quality segment, we see that medium quality, which CoStar calls 3-star apartments, and lower quality, which CoStar calls 1 and 2-star apartments, vacancy rates have gone down a little bit, but not a tremendous amount since the end of 2019. In contrast, the highest quality apartments, 4 and 5-star apartments, vacancy rates crept upward beginning in the third quarter of 2019, reached a peak at the end of last year, and subsequent quarters, they've been declining. Now, we know what the backdrop to that is, in that there was strong apartment construction back in 2019 into 2020. Apartment construction focuses on the highest quality apartments, those 4 and 5-star apartments, and also focuses, or at that point in time, was focusing on denser markets, CBD markets, and high-rise construction. So when the COVID lockdown hit, that demand really withered away, and vacancy rates for the highest quality crept upward. The other side of the coin, at the same time, rents on the highest quality apartments actually declined when we look at the national averages, whereas rents on 3-star, 1 and 2-star apartments really didn't move too much. Now, at the end or third quarter of 2021, where did the dust settle? Well, still don't have much movement in 3-star, 1-star, 2-star. We had significant tightening in vacancy rates on highest quality apartments. We've had a big jump this year in rents on the highest quality apartments. We had a significant increase in rents on 3-star apartments, medium quality, and somewhat weaker, but still noticeable rent increase on 1 and 2-star apartments. Part of the driver is the uptick in households. Got more households out there looking for apartments, and also the fact that construction, new deliveries calmed down in 2021 to give the market for highest quality time to absorb the excess that had developed. So, okay, good story so far, because we're not seeing anything in national apartment data by quality that shows any impingement from the strong pace of home sales.